Hello everyone, welcome back to Bullsmart Investment Academy. In our last episode, we dipped our toes into the vast ocean of mutual funds and learned the basics. Today, we are diving deeper into the pool, shedding lights on the key players and how this whole mutual fund thing works in India. Now let's imagine mutual funds as a team sport. You've got players and coaches, and in the financial world, they are called asset management companies and fund managers. So who are these folks and what's their role? It is very easy to understand. An AMC is like the coach of your financial team. They manage your money and employ someone called as fund manager, who's like the star player. All these AMCs follow rules set by SEBI, our financial referee. SEBI ensures everyone plays fair and square. SEBI and AMFI act like the rule book. They regulate charges, keeping things in check. AMFI is the short for Association of Mutual Funds in India. It's like the coaches association, ensuring that all the AMCs or the coaches follow the playbook. Each AMC will offer multiple mutual fund schemes with different objectives, just like every member of the team is specialized in different roles. Some are batters, some are bowlers, some play aggressively, some play defensively. Similarly, AMCs will also offer multiple types of mutual funds with different objectives and will assign a fund manager for every fund. The AMC will be responsible for processing the deposit, withdrawal, and all the operations tasks regarding mutual funds investment. Now let's talk about how the game is played. When you invest, your money joins a pool with other investors. The AMC assigns a fund manager for each scheme to make the winning moves. They will invest in capital markets with the money that has been given to them by multiple investors. When you invest a certain amount in any of the mutual fund schemes, you get units of the fund in return according to the price of the units. And the price of each unit is called NAV. It's net asset value. Let's say you invest 1000 rupees and the NAV of the fund is 10. You'll get 100 units of that mutual fund. The NAV of mutual fund changes every day based on the performance of the securities in the portfolio of that fund. Now here's the exciting part. As the game progresses, your mutual fund may score some points. These are your returns. They can come from dividends, interest, or capital gains. Picture it like getting bonus points for being part of the winning team. And you can sell your units at a higher price later. If the NAV goes up and you sell your units for more than what you bought them, congratulations, you scored some capital gains. How are you scoring in this game? It is because of the income distribution to investors in the form of dividends, interest, capital gains, or other incomes earned by the mutual fund. You can also have capital gains or losses if you sell the mutual fund's unit for more or less than the amount you invested. So the longer you stay on the ground, the more you will be scoring. If you go for defensive shorts or less risky schemes, you will score better in the long term with consistency. But if you go for aggressive shorts or high risk funds, you won't get out here. But your returns can be negative in the short term. So to sum it up, AMCs and fund managers are the coaches and star player in the mutual fund game. SEBI and AMFI are the rule keepers, and you, the investor, are part of the winning team. Stay tuned for more insights at Bullsmart Investment Academy. Happy investing, everyone. Mutual funds are subject to market risk. Please read all scheme-related documents carefully before investing.